Condominium documents. Where are our insurance requirements? Sue, Elaine, until last year, did we ever have a client ask us where the insurance requirements are for our condo? No. The managing agent contacted the insurance agent and said, what do we need to get? In the past year, every board member wants to know where are the insurance requirements for our condo. And they could be literally anywhere. First off, they might be in the declaration. They might even be on the condo map. Really? We'll talk about that in just a minute, but the condo map is very important, as your insurance agent will tell you. They could be in the bylaws, and sometimes they'll even be an amendment to the declaration of bylaws. So your managing agent, your attorney, and or board member, you have to look in a lot of places to find your insurance requirements. The declaration, basically, just some basics before we move on here, is the project's roadmap. It'll tell you the number of units, number of buildings, number of stories in units, permitted and prohibited uses of each unit, description of the common elements, description of the limits of common elements, dimensions and boundaries of each unit. However, they may not be stated in the declaration. You may need the dimensions and boundaries of each unit. You may need to go to the condo map. And that's important for a catastrophic loss, because if the project's going to be rebuilt, the condo map is what's going to be the basis. Next, it will provide, in the declaration, the total percentage of common interest vote required to approve or not approve rebuilding if the project is substantially destroyed. Again, never saw that before until last year. Confront that issue. 4 condominium associations on the island of Maui did have to face that issue last year. The condo map is literally the as-built drawings for the project. It's usually the site plan for the condominium property regime, indicating the layout, location, boundaries, unit numbers, dimensions of the units, common elements, limit to common elements, and the parking plan. Again, very important document. 99% of board members have never looked at the condo map. It's very, very important document. The bylaws are the usual manual. They specify management and operation of the condominium association. Pretty straightforward stuff. Where are insurance requirements? Well, first off, 514B 143 says, unless otherwise provided in the declaration or bylaws. So stop just a minute. If there are insurance requirements in your declaration or bylaws, you can stop right now, because this statute will not control. One more time. Unless otherwise provided in the declaration or bylaws. So if your declaration or bylaws have insurance requirements, this statute will not apply. 90% of my condominium association clients have insurance requirements in their documents. 10% do not. So if you're one of the 10%ers and you look at it and there are no insurance requirements in your documents, this is what will control. And the big question everyone in this room is asking, Chris, does 514B require us to have full coverage for our project? The answer to that question is maybe. Unless otherwise provided in the declaration or bylaws, the association shall purchase at all times and maintain the following: property insurance on the common elements, providing coverage for special form causes of loss. Your insurance agent will tell you what that is, because I don't have a clue. And in a total amount, read along with the attorney, not less than the full insurable replacement cost of the insured property, less deductibles, but including coverage for the increased cost of construction due to building code requirements at the time the insurance is purchased at each renewal date. My reading of that, as your attorney, if I was your attorney for your association, is that it says in the total amount not less than the full insurable replacement cost of the insured property means 100% coverage. But we better read on. If a building contains attached units, your normal condominium association high-rise, the insurance maintained under the previous section to the extent reasonably available. One more time, everybody, listen to that word. To the extent reasonably available. Your insurance agent will tell you if this coverage is reasonably available. That's their professional, that's what they're going to tell you. Shall include the units, the limit to common elements, except as otherwise determined by the board, and the common elements. One more time. Shall include the units, the limit to common elements, except as otherwise determined by the board, and the common elements.
The insurance need not cover improvements and betterments to the units installed by unit owners, and they usually do not. But if improvements and betterments are covered, any increased costs may be assessed by the association against the units affected. So if you're going to cover betterments and improvements, the association can assess the cost for your betterments and improvements in your unit against you individually. So your other fellow owners aren't paying if you've got marble flooring. For the purposes of this section, improvements and betterments means all decorating fixtures, furnishings installed and are added located within the boundaries of the unit, including electrical fixtures, appliances, air conditioning and heating equipment, water hoses, built-in cabinets installed by unit owners. If a project contains detached units, think townhomes, think single-family homes. By the way, I have a couple of 514B condominium associations that are comprised of single-family homes. That is common. They're detached units. They're not attached to each other. Notwithstanding the requirements of this section that the association obtain the requisite insurance, if the board determines that it is in the best interest of the association to do so, again, board has discretion, just like for attached units. The insurance to be maintained under this subsection, under the subsection A1, may be obtained separately for each unit by the unit owners. If there's nothing in the declaration of bylaws, the board can say, look, you have to insure your own unit. We're not getting a master policy to insure each unit like would be required for attached units. Provided that the requirements of this subsection shall be met, and provided further that evidence of such insurance coverage shall be delivered annually to the association. In such event, the association shall be named as an additional insured. The board decides that all of you, for your detached units, have to get your own insurance. The board says, okay, here are the insurance requirements, and by the way, you need to provide proof of insurance to the association every year so we can verify that you got the insurance that you're required to get. And the association has to be a named insured on your policy. Community and Homeowner Associations, Chapter 514B, 421J. This will be one of my briefest discussions today, ladies and gentlemen. Unlike 514B associations, planned community associations and our homeowner associations organized pursuant to 421J have no statutory insurance requirements. Insurance requirements for planned community or homeowners associations, if any, will typically be stated in the declaration and or the bylaws. I have 2 community associations that have no insurance requirements for owners. None. The board still insures the common areas or common elements, wherever they're described in the 421J, but they don't insure anything else at the project. Very, very important. Funding of insurance premiums. Chris, how do we pay for the insurance? Well, again, until this year, it was in the maintenance fees, no problem, wasn't much money, we moved on. I now go to 2 to 3 meetings every single week this year to discuss special assessments for insurance. I am, thank God, accompanied by an insurance professional. So, normally, it's in the budget. And you have a set amount because you got a quote from the insurance agent. If the insurance agent told you it's going to go up 3 to 5% every year, which is historically typical for the past decades, since Hurricane Iniki. So the board knows what insurance is going to be next year. That hasn't happened this year, ladies and gentlemen, as all of you are aware. You get your quotes, 100, 200, 300% increases, as both of the insurance agents are nodding at me right now, saying, keep going, Chris, we're at auction. 800%? They're both nodding at me again, ladies and gentlemen. This is not good. And so, Chris, we're on the board. How do we pay for this? The nasty word, special assessment. Except in an emergency situation or with the approval of majority of unit owners, a board may not exceed its total adopted annual operating budget of more than 20% during the fiscal year to which the budget relates. You've got $1 million budget at your association, annual operating budget. Insurance is going to add $300,000 to that budget. You have to do a special assessment because that's more than 20%. And by the way, that's now been common practice for my more than 100 condominium associations. They don't have that much money. It is well beyond 20% of their budget when they get their quote, and they've got to do a special assessment. Call the attorney. We're going to pay him to take the crap at the meeting. You're volunteers. That's what you should do. The attorney and the insurance professional should come to the meeting when the special assessment is being voted on by you, because yes, you're the one who has the gun to your head, and you're the one who's going to have to impose the special assessment on all of your fellow owners. I'm being paid. The insurance agent is now making a much larger commission on your policy in light of the premium that you're paying. And we are the paid professionals to be there to explain why this is happening. You, as the volunteer board members elected by your fellow owners, should not be there to explain how or why this occurred, and you are certainly not to blame for it. So back to the special assessment. Normally, for a 20% and 20% excess of the budget, you'd have to get owner approval. Owners would say, you can't raise our maintenance fees that much. But there are exceptions in the statute, thank God. And it says, except in an emergency situation, it has to be approved by unit owners. And an emergency situation is defined as necessary for the association to, one of the definitions is necessary for the association to obtain adequate insurance for the property that the association must insure, i.e., whatever the amount is of the insurance, you don't need owner's approval for a special assessment. Whatever it is, 20%, 30%, 40%, yes, 50% maintenance fee increase, you don't need owner approval to impose a special assessment to pay insurance. When I make that statement at a board meeting, you can hear a pin drop, just like today. And when an owner raises their hand and say, Mr. Goodwin, I don't have the money, what if I don't pay? I will foreclose on your unit, and you will lose it. Can the board make special exceptions for individuals who can't pay their special assessment to pay insurance? No, but. The board has a duty to treat all owners equally. So you can't give special privileges. But if you do have people who are economically impaired and they're going to have difficulty paying, you can offer them a payment plan with interest. But the problem for the board is if you've got too many owners doing that and your insurance agent comes to the meeting and says, your insurance premium's due Monday. Did I exaggerate that, either one of you? That your insurance premium is due Monday and today's Thursday night. You're not going to have a lot of time to offer many owners a payment plan if you're going to pay the insurance premium. And because of the way the market conditions are more volatile, normally you don't have the insurance quote 30, 60, 90 days in advance. Sometimes you have it 7 days in advance. And you have to raise this money quickly. So you might get an extension to pay the insurance premium with the insurance agent or the insurance carrier, but you're still going to have to impose a special assessment, and Hawaii law says you give 30 days. And more often than not, you're going to tell the owners, by the way, we need the money in 30 days. And that goes over very well too, particularly when it's well in excess of $1,000, $2,000, or $3,000. Other options. Premium financing offered by either insurance companies directly and or third-party premium financing companies. The interest rates can be quite excessive, and I use that word liberally. I don't hear many insurance agents recommending that, but if that's the only option you got, then you've got to take it, period. Some insurance carriers, but that's not becoming very common today is what I understand. They're getting out of this business. Well, they will finance your premiums, but that is becoming less and less common. And usually it's now third-party companies who are providing the financing. And they're providing this financing not at credit card rates, but still there are much higher rates than you would anticipate. Should you borrow from reserves? A huge question, a huge question. And I caution boards against it. I'm not an advocate of using your reserves to pay insurance premiums. Number one, that's not what they're for. That's not what they're for. Number two, you have to look at your governing documents. Lo and behold, this is something I've never seen before. Capital reserves shall be only utilized for capital improvement projects. Lo and behold, there's language now in many bylaws that I never looked at. That's what it says. If the bylaws say that reserves may only be used for capital improvement projects, guess what? You can't use the reserves, even if it's an emergency, because that's what the bylaws say. I have a project right now that is attempting to change the bylaws to specifically allow the bylaws for the board to use the reserves for insurance premiums because this problem has arisen. At that point, they have no choice. They have to special assess. Also, even if you're permitted under your documents to use the reserves, you have to consult with a reserve specialist. Why? You still have a duty to make sure your reserves are fully funded in accordance with statutory requirements by the end of the next fiscal year. You must have sufficient reserves by the end of the next fiscal year in the account. If you do not, you will be in violation of state law. So you're going to have to consult with your reserve specialist, and you're going to have to ask the reserve specialist, okay, if we borrow this amount of money this year from reserves, what's going to be our reserve contribution next year to catch up to make sure that we are not in violation of state law? It's a complicated procedure. If you're borrowing from reserves, all of those historical actuarial numbers that these reserve specialists put in are going to be upset. The cash flow that they were anticipating coming is actually going out. And so they're going to have to rework their numbers to tell you it's not just taking the number out, because it's going to affect their on what the valuation is, then this is okay. That's the first one. And this one is actually clear. Attorneys wrote this and they got paid for it. Next, again, flood insurance from the federal flood, again, very similar, which shall be not less than A, the maximum coverage available under the National Flood Insurance Program called INFID, for all buildings or other insurable property within a project to the extent the buildings or insurable properties within an area having a special flood hazard, flood zone, or 100% of the current replacement cost of all such buildings and other insurable property within such area if the property is located in an additional flood area zone designated by HUD. An insurance company authorized to do business in Hawaii having a financial rating by best of, in an amount sufficient to provide the full repair or full replacement thereof without deduction for depreciation, with an agreed amount and inflation guard endorsement and a water damage endorsement in the event such loss of apartments and a pertinent common interest. What's all this mean? Again, have your insurance professional take a look at this and say, okay, based on what's here, this is what's required, but he or she's going to say, this is what I recommend. There's a lot of flexibility again in this. It's not clear. This one is pretty good. It's still not great, but it's pretty good. These bylaws say, required coverage, the policy must ensure all common elements of the project, and whether or not part of the common elements, all exterior and interior walls. The policy must cover 100% of the cost of replacing that property without deductions for depreciation. Pretty clear. I like that. It's good stuff. Coverage not required. This drafter goes on. The policy does not have to cover exterior glass if the board decides this is too expensive. Well, you know, the building's 100% exterior glass. What do you guys want to do? Give you some names, and they're my clients, so I can say them. Honolulu Park Place, everybody know? New owner? 100% wraparound glass, 360. I've told the board they should get glass coverage, so everybody knows. No secret. Just want to go out there. I wonder what the insurance agent will do. They get a full high-rise with full glass over at Howard Hughes, Ward Center. Oh, you guys don't need it. If the board decides it's too expensive, board members, what authority you have here? Former policy. The policy must cover those risks generally covered by a special form policy. Special form policy, again, is whatever the insurance agent tells you. The association must buy earthquake coverage and or hurricane coverage. We're in Hawaii. Wait for me, everybody. If it's available at a reasonable cost. The board has to cover hurricane or earthquake coverage if it's available at a reasonable cost. Otherwise, this says you don't have to get it. It doesn't say what a reasonable cost is. If we have to raise everybody's maintenance fees $100 a month, that's not reasonable. That might be. I loved this until I got down to the last sentence. And then I'm like, God, this guy, this girl were doing so good, and then they fell off the cliff. Final takeaways. Know the law. 514 applies, but let's face it, it's not going to apply for 90% of you, unless otherwise specified in the Declaration of Bylaws. Remember, special form causes of loss, you don't need to know that. That's going to be your insurance agent.
Total amount not less than the fully insurable replacement cost of the insured building, less deductibles, but including coverage for the increased cost of construction due to building code requirements at the time the insurance is purchased at each renewal date. As far as I'm concerned, 514B's requirements are full replacement cost, period. That's my interpretation, I'm sticking with it. Note the bylaws and amendments, insurance provisions can be changed in these documents. Sneaky, sneaky, sneaky. You could have a bylaw amendment that changed the insurance requirements. Make sure your attorney or insurance agent review them all. Note the permissible funding options. I told you before, annual budget, that didn't work this year for any project I represented. Special assessment, that was the default option for 90% of my projects this year. Premium financing, Suey Lane, not very common, not very high. Interest is high, nobody likes it. Borrow from reserves, I don't like it. It happened, I'd say 20% of my projects, I get real wishy-washy. It just makes me nasty feelings. I would say that the reserve specialist has to be consulted on that. Just don't pull the money out and say, put it back in the reserve specialist. Go, look what you did to my house of cards. Know the loan documents. My final statement today, before I give you my closing. Everything we just talked about today, every word we just talked about today, means nothing when you're getting a capital improvement loan from a bank. This slide, throw it away. Why? The lender can impose any insurance requirements on you at damn well pleases. We want 110% full replacement cost. Perfectly legal. Perfectly legal. You can't fund your insurance premiums from your reserves. Perfectly legal. Why, Chris? Why can the bank say that? Because the bank has a vested interest on what your reserve funds are. And it can say, you can't borrow, you can't use your reserves to pay your insurance premiums, even if it's permitted by law. Because we're requiring you to keep those reserves at minimum funding state level, and you can't touch that money. So again, if you're borrowing money from a bank to do capital improvements or anything else at your project, the bank will ignore everything Chris Goodwin said in the last 26 minutes. And they will say, that's nice, Chris had that presentation, and we've been to his presentations, and did you hear his last paragraph when he stopped? He said, we can impose any requirements we want, and they do. And the requirements over the past 3 months have become horrendous. There's a lender here. Horrendous. I wish I could say that their requirements are worse than their competitors. They're not. Kudos. They've all got in a smoke-filled room, or would that be a vape-filled room? Anyway, they've all got in a room and they've decided, no, and this is not. There's nothing deviant going on here. There's nothing illegal going on here. The fact of the matter is, when you are a lender in Hawaii and you see 4 condominium associations destroyed, and if you had loaned those condominium associations money and they were underinsured, you have nothing. And they don't want that to happen to them. And all of us need to understand that. So when they impose these admittedly onerous requirements on you to borrow money, and trust me, they are onerous. The documents that I have dealt with the lenders for the past 10 years have not materially changed for their capital improvement loan documents. They have now. They have now. They've changed dramatically. My final thought. As a board member, everything I've told you here today, and your insurance agent comes and says, do you want to insure for 100% full replacement coverage for a hurricane and every other catastrophe? The question that you have to ask yourself is, what would a reasonable and prudent board do under the same or similar circumstances? You are the board member of a condominium association in Hawaii located in the middle of the Pacific Ocean that averages a hurricane every 13 years. We're overdue if no one's doing the math. Okay? Every 13 years. Okay? So we're overdue by about 20 years. So if you think a minute, we have that catastrophic loss. You're underinsured. You're sued. The Directors and Officers Liability Policy Standard ISO form, Insurance Service Organization Policy form, does not provide coverage to a board of directors for a claim alleging failure to procure insurance coverage. One more time. The D&O policy of your association likely does not provide coverage for claims against board members alleging they failed to procure adequate insurance coverage. The moral of that story and the easy way out: full replacement coverage for your building. Thank you, ladies and gentlemen.